Hello everyone and thanks for jumping back into my channel. So today we're going to be talking about a very interesting topic called as CBDCs or central bank digital currencies, and we're going to go through all the advantages, disadvantages, opportunities, threats, and discussions regarding the same. And we're going to discuss how they're different from electronic payment services like GPay and Paytm, and what the future holds for CBDCs in general. So let's get started. So a CBDC is short for Central Bank Digital Currency, and it refers to virtual forms of fiat currencies. So basically, how an institution or a central bank of a country prints money, prints dollars or prints rupees. In a similar way, the central bank of the country will start issuing currency, but in a digital form, not in a physical form. So, for example, how in India, the RBI, it prints money using a printer or in a factory or wherever it prints money, it mints coins as well. So, in a similar way, instead of doing that, now what the country plans to do is what the RBI plans to do is transition into digital currency and issue currency on a blockchain instead. So, instead of having physical currency, along with it, we'll also start having digital forms of the same currency. So now you'll tell me, but I already have digital currency. Like I have GPay, I have Paytm, I have my debit cards and credit cards where I make payments online and I don't use physical cash. So isn't that digital currency in a way? But there's a distinction between the two. What y'all are talking about is digital payment services. Basically, what happens when you GPay your money to someone else? There are debits and credits going on behind the scenes between your bank and the other person's bank. There is no actual real money being issued by an external entity. It's just debits and credits, pluses and minuses happening behind the scenes between two banks. So those are means of payments. Those are electronic means of payments. They are not digital currencies in itself. So what we are talking about is something different, and I hope the distinction is clear right now. Digital currencies are a liability of the central bank. They are issued by the central bank, and they're not just pluses and minuses happening behind the scene. So, like how initially in the earlier years, money was backed by gold and silver. So, gold and silver were the assets, and cash was a liability of the central bank. Similarly, even now, if the country adopts digital currencies and issues digital currencies, they'll issue fresh digital currencies, which will be a liability of the central bank. So basically, what will happen is y'all will think that if the country issues new currency, there'll be inflation and hyperinflation because of new currencies, new money coming in the circulation within the ecosystem. But that's not really true. So what the government could do is they could, tell you to deposit all your money with banks, and instead of that money that you deposited with banks, which are now out of circulation altogether, you will get digital equivalent currencies in return. So basically, you give away 1 lakh rupee of yours to the central bank, and the central bank will issue 1 lakh rupees worth of digital currency to your wallet. And to incentivize you to do the same, they'll also provide you with tax benefits for that. So now you're incentivized to convert your physical money into digital currency, which will, fasten the growth of adoption as well. Something like that could happen for mass adoption. That's what I feel. And yeah, so I hope the distinction between CBDCs and electronic payment services is quite clear now, and why issuing CBDCs won't lead to inflation or hyperinflation. These are the two most common questions that I get when I talk about CBDCs. So now let's see how many countries have already adopted CBDCs or are in the research phase of doing so. So here, if we see, 91 countries have been tracked, and almost all of them are planning to adopt CBDCs in some way or another in the near future. These include countries like China, USA, Russia, India, Sweden, and any big country you can think of. In fact, there are some countries which have already adopted digital currencies of their own. For example, Nigeria, Bahamas, East Caribbean, etc. And countries like China have already tested pilot versions of their digital yuan, and countries like USA, India, etc., are expected to follow the same route. So, governments and RBIs and central banks of the countries are willing to move to this next model of cashless transactions in the form of CBDC. So here you see 14 pilot, 16 development. All these countries in some way or another are planning to adopt CBDCs within their ecosystem. So here you see eNaira launched in October 2021. United Emirates and Saudi Arabia launched a bilateral CBDC pilot. So there are plenty of examples for this. Um, Now let's talk about some of the advantages of a digital currency. What's the point of having a digital currency in the first place? So first of all, the easiest advantage is no printing cost and distribution cost for the government. So printing currency requires cost, minting coins requires cost, distributing that currency to people requires intermediaries and costs and overheads. All this will be done and dusted if we have digital versions of the currency. That's one of the advantages. The second advantage is that it can lead to financial inclusion. So this is pretty interesting, and what happens here is basically in the traditional financial system, people who are most vulnerable and who need the money most, they are often the ones who end up getting the money the last, or they don't get money at all. For example, in US in COVID times, there was a stimulus of $1,000 given to everyone, but eventually what happened is the people who needed the most were the people who didn't have access to a financial banking system, and the other ones who were left out because the money was transferred in banks and banks acted as an intermediary to give it to the people. Now, many people who didn't have bank accounts, they ended up not getting the stimulus check at all. So this led to lack of financial inclusion. This is called as lack of financial inclusion. Because the banking sectors in many countries are not developed, especially in developing and underdeveloped countries. So, if for example, if US already had their digital currency, all you would need is a smartphone. All you would need is a smartphone. You would install a wallet in your smartphone, and the central bank could directly airdrop that stimulus check to you right in your wallet without you going out of your house or without you contacting your bank. The role for the bank would vanish altogether over here, and which would lead to better financial inclusion in times of distress. However, there's a negative to it as well that banking system and banks are very crucial to the financial stability of any country. So the governments and the central banks need to come up with a way uh, in order to include banks in this process and not keep them out of the equation altogether. Because that could lead to a disaster, and you don't want half of your country being bankrupt overnight, right? So that's what governments and central banks around the world are researching on how to improve financial inclusion and how to include banks in this equation of CBDCs as well. So that's one of the advantages, financial inclusion. Another example that I can give you is, for example, say in Maharashtra, there has been no rainfall for 3 years. There has been no rainfall for 3 years, and people and farmers are committing suicide. And the government has noticed that, and they want to incentivize every farmer living in Maharashtra with a check of 10 lakh rupees. Now, for that, traditionally, you would have to go to a bank. Being a farmer, you'll have to go to the bank. धक्के खाने पड़ेंगे, डॉक्यूमेंट्स दिखाने पड़ेंगे, केवाईसी करवाना पड़ेगा. आधे बैंक्स के पास, आधे फार्मर्स के पास probably बैंक अकाउंट रहेगा भी नहीं. So much मेहनत, and in the end, after 3 months, many farmers won't even get their money, won't even get their incentives. So again, people who are most vulnerable are left out. Instead of that, just imagine the central bank just airdropping all that money directly in the farmer's account. That would be so much easier, so much faster, so much less overheads for the whole economy as a whole. And again, that leads to financial inclusion. So that's again an example of financial inclusion. Another example I can think of is another advantage I can think of is facilitation or more efficient facilitation of monetary policies. For example, if the country is in recession right now, if the country is in recession, the money which is in digital form, just because it's in digital form, it can be programmed in some way or another. Like the RBI could just program the money in such a way that the money expires in 3 years. So now, whatever money is sitting idle in your wallet, you will be incentivized to use that money and get it out of your wallet and get it in circulation in the real economy, because of which the velocity of money will increase and because of which the country will come out of recession quicker. So money can be programmed in many ways. For example, in traditional crypto, like for example in Ethereum, um, there is something called as tokenomics. So there is a supply of Ethereum and there's a demand side of Ethereum. Every every few hours or every day, some amount of Ethereum are mined, some amount of ether is mined, and some amount of ether is transacted as well. Like if you want to send money from one wallet to another, you need to spend some fees, some transaction fees, etc., for that transaction to go through. Now ether is programmed in such a way that whenever a transaction is occurred, some amount of that transaction fee is burnt permanently. So if the transaction fees, if the number of transactions are big enough, what will happen is the amount of ether burnt will surpass the amount of ether mined on any given day, and which is what will make the whole token deflationary in nature instead of inflationary, because new ether is being mined every day. Previously, new ether was being mined every day, but on the other hand, because of more transactions happening now, more ether is being burnt, which makes the whole token deflationary. So this was a program which was added in Ethereum after a few years. In similar ways, just because the money is digital and on a blockchain, the money can be programmed in ways and which would lead to better and more efficient facilitation of the monetary policy. That's one more advantage of the whole CBDC thing that I can think of. But however, it does come with certain disadvantages of its own as well. For example, okay, one more advantage. I can't believe I didn't mention this earlier, but since all the transactions are happening on a blockchain, all the transactions can be viewed by the RBI and can be audited by the RBI. If you're holding cash, the scope of corruption, the scope of indulging in terrorism or in duplication of money, etc., which we've seen, which has been happening for years and years and years now. All this can be reduced with the use of CBDCs because they are not easy to replicate, and all the transactions can be audited and can be verified on the blockchain and can be viewed by the RBI and can be more transparent overall. Counterfeiting is not possible as well. So the whole financial system becomes much more transparent because of that. For example, let me show you. Scan. So you see all the transactions that are happening on the Ethereum blockchain. Every second this keeps updating. Every minute this keeps updating. Now, if I want to see ये wallet का transactions, I can just click on the wallet and every transaction that has ever happened in this wallet can be seen by me. Now imagine every transaction that you do can be seen and verified and audited by the RBI. Here you see out from money is going from this wallet to this wallet at this time on this block number, the method and the amount and the transaction fee, everything, every single thing can be verified. But since Ethereum is a decentralized blockchain, me as an external user can also see this information. But with CBDCs, all this power will lie only and only with the RBI, which makes it much more centralized and which brings me to a point of concern that you're just giving too much power in the hands of one institution. Like one institution will be able to track all your movements everywhere, every transaction of yours, which I think in some ways is unhealthy. Now, for example, if RBI, with the help of the government, decides that whoever doesn't have a vaccine, unka wallet freeze kiya jayega till they get a vaccine. Now that's something which is unfair because taking a vaccine or not is a personal choice, and the government should have no say in it. But just because you've given so much power in the hands of one institution, you you are forced to take a vaccine, or the government can just freeze a wallet. They'll say one fine day that we think something is fishy with your wallet, so your wallet is freezed and under investigation for 2 months. And even if you've not done anything, your wallet is frozen for 2 months. So with centralization comes a lot of problems as well, and that is one of the concerns that I have with CBDCs. And yeah, I mean, what else? Yeah, so one other problem that I can think with adoption of CBDCs is that low penetration of smartphones in India. Right now, only 54% of Indians have access to a smartphone. So if you don't have a smartphone, how will you download a wallet? And if you don't have a wallet, like how will you be entitled to receive CBDCs? So this smartphone penetration needs to increase before mass scale adoption can be reached for CBDCs. one more very big advantage of CBDCs is cross-border transfers. Like, Abhi, if you want to transfer money from India to a person or a friend sitting in US, you have to go through central agencies. Or if I want to send it to someone in Europe, I have to go through the Western Union, send the money to the Western Union. They'll charge such a big fee, they'll cut money, and they'll pass on the additional money to my friend in Europe. This whole process takes a lot of time. It's very inefficient and it's very, very, very expensive. Commission fees charged can be as high as 10%. I'll give you an example of my own friend. His admission in a college in Europe got cancelled because there were technical difficulties in the Western Union and they couldn't pass on the fees to the college within time. So uski wajah se his whole admission got cancelled. Imagine having CBDCs or crypto in this case where you can just transfer money from your wallet to your friend's wallet like this with a snap of your finger within seconds. You don't need intermediaries, you don't need transaction fees, you don't need commissions, nothing. You can just transfer money without paying big fees or without any technical errors, and you can also do that within seconds. So this is all I could understand about CBDCs, and I tried explaining it to you in the simplest of ways and with the easiest of hypothetical examples that I could think of. Thank you for tuning into my channel, and do like, share, and subscribe, and let me know in the comments what do you think. Thank you.